But let's shift focus to earnings. We also have Nissan Joseph, the CEO at Metro Brands, joining us on the show to talk to us about their earnings because it was a bit of a muted set. Just wanted to understand from you, sir, whether the consumer sentiment has improved and what's your take on the outlook?
So I think, when you look at the numbers that we performed last quarter, it really was more about impacted by the high COVID bump from last year, as opposed to a consumer sentiment. We're not seeing any erosion of consumer sentiment. You do have to form a regression line as to how the sales have been going over the past few years, going back to pre-COVID times. We are growing at a very healthy clip. We've guided to an 18% CAGR year-on-year growth. And we're on track to do that. I know it doesn't look like that this quarter because of 7%, but if you look at last year for the quarter, we were north of 30+% growth. So, it will normalize. So what you're seeing right now is a headwind of normalization, and we firmly believe it is not a headwind of demand in our business.
Sure, and your margins this time was around 31%. When do you plan to hit back to that targeted 35% EBITDA margin?
When you look at the 31% EBITDA, it really includes our Cravatex numbers, right? It's not a consolidated level. The numbers we speak to is at a consolidated level because, that is the core of our business, right? And the core of our business is Metro Brands business, and Cravatex is a recent add-on to it. The core of our business is still running 33%, right, in EBITDA. So that is a very strong performance. We guide that we will be in the range of 30 to 35% EBITDA. And one of the reasons we say that is, retail has ups and downs and blips both ways. We don't get excited about blips when they go up. We don't get down when the blips go down a tad. But, we're always performing in that range. And that's what, if you look at Metro Brands over a course of many, many years, has been a very consistent performer. And looking to the future, I see no reason why we wouldn't be able to achieve our numbers, and confident that we can achieve our numbers of the 18% EBITDA and continue to keep, the 30 to 35% EBITDA, and continue to keep our profits in the 15 to 17% range after tax.
And you're also confident about opening 200 stores then?
Yeah, so the number that we gave in our guidance of 100 stores for 2 consecutive years for a total of 200 did not include Fila, and it did not include Foot Locker, right? So first, to talk about the base set of 100 stores, we're confident we can deliver 100 plus stores every year as we guided. This year, as you mentioned, we're at 87 stores. With 1 quarter left to go, we're confident we'll exceed the 100 store mark. And we also, as we look to the runway for next year, we see the opportunities to expand our existing portfolio of stores to achieve that 100 and probably exceed it, right? But that does not include the Foot Locker and Fila stores, which will be more accretive to that growth number. So there's significant growth coming from Metro Brands in the years to come.
And that significant growth would, entail 20% CAGR growth, because that's what analysts are pegging?
So, Metro has always prided itself that it's grown at a CAGR of 18%, right? And that's not a number that we're shy of. I think this year, obviously, we're not going to be hitting that number only because of last year's COVID blip. But if you look at the line of growth over the last 4 or 5 years, including the COVID years, which was, as you know, quite down, but then we came back from COVID very strong, we continue to be at that pace. So I'm confident that, we can be in that 18% range as we've guided.
Okay, Mr. Joseph, on that note, we'll let you go. Thank you so much for making time. With that, it's a wrap on this edition of Markets at Noon.